All right, I'm going to welcome John Polomny of Actionable Intelligence Alert.com. He has his finger on the pulse of the uranium market. He's predicted this incredible run-up in prices, and we want to have him on to get some questions answered about what's happening, what's moving this market. So welcome, John.
Great to be here.
Yeah, thanks so much. So I think today you mentioned how the spot price hit $50. So what's the big action happening right now?
Well, I think recently, we've seen some pretty explosive moves in the spot price recently over the last couple of weeks. And I think that that's been a result of the buying pressure that's been placed on the market by the Sprott Uranium Trust that just came into being a few weeks ago. And so I think that's, there's always been this view that, we know most people should know by now the supply demand mismatch that a lot of folks have been talking about for several years as a result of the very low uranium prices. This is a commodity market, so low prices basically strangled off any new supply, and yet demand continued to grow. Yet there was always a view for the last couple of years. It's like, when is this thing going to get going? So you'd have these fits and starts, or people would be constantly predicting the next, move in uranium prices higher based on the supply demand differentials that people thought were out there. And so I think what happened, I actually listened to a podcast today that Mike Alkin and some other folks were on. It was Bloomberg. It was actually a Bloomberg podcast, Trillions, I think it's called. But anyways, some hedge funds, I think, got together, and then Sprott, they have experience in the physical trust with their gold, silver, platinum, and palladium trust, which trade in Canada and on the NYSE. And so I think there was a view that, something similar could be done with uranium. Now, the uranium market being so tiny, the view, I think, or the idea was, create a vehicle to soak up the spot or the supply that was allegedly out there and see if that would get the spot price moving. And so they created this vehicle. They basically took over UPC, which is Uranium Participation Corp, and transformed it into a trust, and then created the at the market function, which means that if it trades above, if the price trades above net asset value, then they can issue shares and buy, spot uranium and take delivery of it pretty near term into the future. So what has happened, I think, is that it kind of shocked the market, because I don't think there's as much spot supply out there as some people were thinking there was. It's a very opaque market, right? It's not like the oil market or the copper market where you have inventory reports coming out all the time. It's a very small, insular, opaque market that doesn't have a lot of price discovery. There's not, when you negotiate a contract between a utility and a uranium producer, there's usually NDAs involved. It's not broadcast to the market. So I think this vehicle has shown a lot of light onto the market. And I think that we're in a situation where the capital that's coming in now, obviously, you add the situation with the Reddit people and Wall Street bets and this kind of action, and it's something that's moving. It's the new shiny lure. And so you're getting, price action begets more interest, begets news, begets more price action, more capital comes in. So I think we've had a pretty decent move recently. Whether or not that continues will, I think, hinge on the continued performance of the spot price. I've just heard some interesting tidbits just from some of the contacts I have. There's a guy that used to work at Sprott that people can follow on Twitter, Kevin Bambro. I think he actually owns 400,000 pounds of uranium himself, but he's been contacted by people asking him about his uranium. There was another guy that I know, I've known for a long time. He's pretty switched on. He said that some of the utilities were calling Sprott and asking him what they were doing. They had no clue about this vehicle, how it worked, what was going on. So I think the utilities, who are the primary consumers of uranium, I think they've been caught flat-footed. They're just like anybody else. They're like typical retail investors. They just got caught flat-footed here a little bit, I think, because they had recency bias, right? They've been able to buy what they needed out of the spot market. It wasn't necessary for them to enter into any negotiations with the uranium companies. And now I think that, everybody was on vacation, and it's, woke up, Rip Van Winkle kind of woke up, and all of a sudden the spot price is at 50, and oh my God, what's happening? So kind of a lot of stuff happening short term there, but a lot of other medium and longer term news also.
Now, is there just a shortage of pounds that people are trying to pick up? And is there a gap that needs to be filled? And that's what's causing the price to go up so drastically?
Several things. I mean, there's not really a shortage, I would say. Well, I mean, if it depends on how you look at it. There's going to be a constant trickle of uranium that comes into the spot market, about 1 million pounds a month, 1.5 million pounds a month from various producers. But that can get soaked up in a couple of days with a Sprott vehicle. If you can follow, there's a guy named Alex Weinstein on Twitter. He does a good job of amalgamating all the data and puts it out on Twitter onto a Google Doc. I mean, you can basically see every day he's got it all graphed and everything. So, I mean, they can easily absorb that. But I mean, I think, we're rapidly finding out with the kind of price jumps we're seeing that the material's not there. So then it begs the question, if you're holding some material and you see this kind of price action that's happened just in several weeks where you've had a jump from about 30 to 50, do you say, well, wait a minute, I'm going to hold back my material now because something's going on here? So I think there's a lot of kind of a market, I don't know, like a trade. It's hard to say, right? Yeah, I mean, you have 180 million pounds of demand. You have about depending on who you talk to, 125 to 130 pounds of mine, plus 25. I mean, there is a supply deficit. So we're going to find out, I guess, is what we're going to see. Depending on who you talk to, there's a lot of speculation going on with people that are a lot smarter than me, that are a lot more plugged in, and they see a rapidly rising price over the next something that in the last bull market was probably a 3 or 4 year deal. They see playing out over a year to 18 months, just because I think with all the price action you're seeing, it draws more interest. It's creating a flywheel effect. It's creating it's a self-reinforcing narrative, if you will.
Exactly. So Sprott is just sucking up, all the excess supply out there. And so people are scrambling, and you think, and others, I guess, think that it'll take months. Like it could take 18 months to really fill that hole, because Sprott is buying it at whatever price they can get it at, right? They're not playing games like the utilities do, right?
Well, you got to remember, I mean, the people that run Sprott are very smart too. So if it's trading above, I mean, I think people were shocked the other day. The original prospectus was $300 million on this thing. And then they went back and increased the ATM, and if people were thinking, well, they're going to add another 200 or 300 million to it, and then they came back with $1 billion, size it up by $1 billion. So they have to put that money to work, and so what they'll do is they'll just keep bidding it up. And I'm quite sure that the people at Sprott have already positioned they do a lot of private equity, they do a lot of funds. Investing for investors, they put funds together, and I'm quite sure that they were positioned in many of the uranium stocks. So this vehicle was designed to do this. It's not. This is what it was designed to do. People have kind of, if you listen to that podcast with Mike Alkin and the guy from Sprott today, they all kind of thought this up over the last couple of years and brought it to fruition. It's kind of similar. We saw something similar last year. If you read Harris Kupferman's article about the Grayscale Bitcoin Trust, he had a great article about that, and it was something similar, the same type of price action. We just get this situation where this thing continues to trade above net asset value. They'll just keep buying it. They'll put the offers out there. If they don't get hit on the bid, they'll just keep raising the offer. And I don't know. So I don't know how far or fast it could go. I mean, I think people are shocked at how fast it's went already. So there's nothing stopping it. As long as there's interest, they'll just keep increasing the size. And I think what's going to happen eventually here pretty quickly is it's going to shock a lot of the utilities, and they're going to have to come and start contacting Kazatomprom and Cameco and some of these other people and saying, look, we got to get some fuel locked up. And then I think because it's been a 10-year bear market and we've bled out this industry, I don't think there's going to be contracts signed at $50 or $60 a pound. I think that the miners are going to be in a situation where they're really going to be able to take advantage. And, for the utility buyer, this is another, commonly known thing. I mean, you have a $3, $4, $5 billion asset sitting there being a nuclear power plant. I mean, the fuel that goes into it, regardless if you're paying $30 or $100 a pound, is almost immaterial to running the plant or amortizing or the cost of the electricity coming out of it. So it's not really relevant, and it just gets passed on to the ratepayer anyways. They don't care. Public utilities don't care. They run on a situation where our costs are X and we've already negotiated our return with the Public Utility Commission, 9, 10, 11%, whatever. So they just, whatever it is, it is. So they'll pay. They won't have the units shut down. So it'll be interesting. I think because of this buying, though, it's not going to be a 3 or 4 year bull market. It's going to be about a year or 18 months. And then that's, I think you're going to move pretty quick. And I think what will happen is a lot of people are going to get flat-footed because you'll get probably a big spike in price at some point. And I think a lot of the shares are already front running that. The shares are probably pricing in, $60, $70 a pound now. Everybody's front running it. So there's a lot of speculation going on. There's a lot of money coming in, hot money, I call it. A lot of people chasing the shiny object. I'm tracking the interest on Google. You can, look at Google Trends and, put various things in there, or go to Uranium. The Wall Street, or on Reddit, you can Uranium Squeeze and stuff. You can see the subscribers going through the roof, or people signing up. So, and I see the interest in my own newsletter. I can tell when a sector's hot because the interest comes in from a lot of folks that are unfortunately, I think, chasing the shiny object.
Yeah, and I've just never seen anything like it, because every contrarian investor hates just like chasing, these high prices, right? These stocks that have gone up 100%. It makes no sense to do that. But fundamentally, there's just it has nowhere to go but up, it seems like, for the next few months. I don't know what the risk is, unless there's some sort of big economic collapse or something. Like, I just don't know what the downside risk to the price is, because who can flood the market and actually meet the demand of Sprott?
I don't think anybody can flood the market. That's, something that a lot of people think. I mean, just the mechanics of the industry basically has been, I kind of used the analogy one time, I broke my arm in an arm wrestling contest, and I had it in a cast for like 6 months after it was surgically repaired. When they took the cast off, it was like my arm was like the size of like a little twig. I mean, I couldn't even bend it back. And so that's kind of what's happened to the industry, right? It's atrophied, and it's going to take a long time. It's going to take a sustained price to get that muscle growth back. It's kind of a bad metaphor analogy, but that's the best I can come up with, because you can't just flip a switch. That's a common canard that a lot of people think, well, Kazatomprom will just flood the market, but why would they do that? It's not a Soviet company anymore. It's a legitimate company that wants to maximize their asset. They've already said that over the last 5 years, what their plan is. And, I'm not saying, Cameco, they're not even in a situation where they can even ramp their production. Most of these juniors will never produce anything. So there is material out there, and at a certain price, it will stimulate enough capital to come into the market, and it will correct the supply-demand imbalance. But it will take longer than people think. But I think the price will peak long before that, and contracts will get signed. Capitalism does take care of these problems. It's just how long does it take? But I think for risks, one of the main risks probably to this deal is, you can always say you're going to have a nuclear accident, but that's one of those things that's, long tail type situation. But I think another big risk probably could be is, just a general market decline. Uranium stocks are stocks, and in a general market decline, most stocks go down. So I think longer term, you'd still be okay, but it's very hot money right now. So I think if you got a general market decline, everything would probably go down a certain amount, but just be another buying opportunity, because the fundamentals wouldn't have changed in the uranium market.
Exactly. And even if there's some sort of narrative or rumor that comes out that something with Kazatomprom, like they're going to increase their production, right? Or obviously it'll take a lot of time for that to get to the market, but just something like that might cause a dip and a buying opportunity, right?
Oh yeah. And you will, that's a good point that you brought that up, because I'm trying to get a lot of people to focus on that. People should really go back, because a lot of the companies still that were in the last bull market are still in existing juniors. And look at the charts of some of these stocks, because from 2004 to 2007 or 8, when the thing went from 18 to 135 or whatever it was a pound, you could see a lot of these stocks. I used Forsyth as one of examples in one of the videos I made. It had 4 or 5 50% drawdowns on its way from like 25 cents to $12. And so what did people do during that? Did they sell on that drawdown? Did they buy more? Did they look at the fundamentals and say, this is just how it is? This is a very volatile market and the fundamentals haven't finished playing out. I mean, people are going to try to trade around it. I'm not a trader. I mean, some people will trade it. But people need to be ready that this is going to be very volatile and, you're going to be 25, 30, 40% moves down are not going to be uncommon on the way to wherever this thing ends up.
That's really smart. Exactly. It will be volatile. So, one of the reasons I'm really excited to have you on is because you really do have your finger on the pulse of this industry and you follow the news. So what else, what are some other factors and tailwinds that are driving this market?
Well, one of the thesis that I have is that I think that overall we are going to be entering over the next couple of years because of various things, underinvestment, ESG, just general wokeness in the West, which I don't want to get into, but is strangling the traditional energy investments in the world. So you're already seeing, I have a view that we're going to enter an energy crisis that's going to be very bad over the next couple of years. It's going to present a lot of opportunity, but for most people, it will not be very fun. So I think, what we're already seeing, I'll give you an example. You look at a country like Japan where you had Fukushima, and slowly but surely they went through the recertification process with a lot of the reactors. Some of the reactors have to be retired because they couldn't meet certs. Some of them, I think 6 or 8 have already been turned back on. But it's interesting, the guy that is running for prime minister now, one of the leading, I can't remember his name. Anyways, he already suggested in a speech that, he was actually anti-nuclear for a while, but, when he looks at it and says Japan has no natural resources, has to import. So they're paying, $20, $25 an MCF for LNG and competing with everybody else, LNG, or, you can turn your reactors back on. So it makes no sense. These governments, you have a situation in Germany right after Fukushima. You have a situation where the Greens kind of, Angela Merkel, decided that they were going to accelerate the decommissioning of all their nuclear reactors. The energy Vende transition, if you will, that they call it, $600 billion spent and virtually no decline in CO2. And so you have somebody that's running to replace her as on the Christian Democrats, suggesting that it may have not been. You're seeing the cracks beginning. You're seeing the narrative beginning to change. Okay. Recently in Illinois, you had a situation where ComEd was going to shut down early, by the way, the Byron and Dresden nuclear stations. The legislature came together. There was quite a bit of lobbying by the IBEW and a lot of other folks, and they are preserving those reactors. There's $700 million from this legislature to subsidize, because in the news press release, you see a common theme through all of these type of extensions. You have a lot of extensions going on in France. We've seen them in Florida, and this common theme. We cannot meet our climate goals of 2050 net zero if we don't have nuclear as part of the, now, whether you agree with that or not, that's immaterial to this conversation, but that's what the zeitgeist is, and it will not happen without nuclear being a big part of that. So I think those things haven't been factored in to the supply-demand situation, because everybody just assumed, well, Germany's going to shut their reactors down. Japan was talking about going renewable, and then you still have the ongoing growth that's happening in China and in the rest of the emerging markets, where you have 54 reactors under construction, 100 and some odd being planned, and over 300 being proposed. And I think you're going to see more, because you're having China now and Russia. Russians just created, put 2 new nuclear-powered icebreakers on the water. They have a 50 megawatt small reactor on a barge in the Arctic. You're seeing the advancement of small modular reactors, technology advancing. Nuclear power is going to be a growth industry, maybe not necessarily in Western Europe and in the United States, but it will be in the developing world and emerging markets. So you're seeing more and more positive news. You're seeing more and more thought leaders and influencers, whether it's Bill Gates or Michael Burry, from the Big Short. A lot of moneyed people are saying, look, we have to do this if we want to be serious about reaching these climate goals, then nuclear power has to be the base load component of that. Because what's happening right now in Germany, for example, you're burning more coal than you ever burned. And so you spent $600 billion on solar to put solar panels on the Baltic, where the sun comes up at 10 in the morning in the winter and goes down at 3 in the afternoon, and you're going to wipe the snow off, or you can, turn the nuclear reactors back on. Those are your choices. So it's going to be, I did an interview with a guy a long time ago, maybe it was a couple of years ago. He's a guy that was on Twitter for a while, old guy that had been in the nuclear industry for 50 years. His name was Malcolm Rawlingson. We were talking about this, and I'm like, what do you think is going to change this? He's like, it's going to be the realization that, price is what always causes it. And that's what you're seeing. You're seeing record high gas and coal prices in Europe now. There's a discussion about not having having shortages this winter, and these type of things will force policymakers to reevaluate nuclear as being a component. That's my view. That's kind of long-winded, but that's kind of where I'm at on this.
No, I love that. Very succinct. You covered it. And very interesting. So you seem to be willing to hold on to these investments for 10 plus years.
No, I wouldn't say that. So you have to be careful with all of these resource and commodity type situations. They're very cyclical, and they're what I call burning matches. I think what you'll have is a price spike to new highs. I think you'll go to this is kind of the framework I'm working off right now. Because of all the capital coming in, I think you have a run to maybe maybe a little bit over $100 a pound. And then I think you'll start seeing utilities signing contracts, and I think you'll have the price settle back at a price, I don't know if it's 70, 80, 65, something like that, that enables enough capital to come in to meet the demand longer term. But by that time, you'll be well off the highs on the uranium stocks. So you will see a peak in the uranium stocks, speculative peak, well before probably the ultimate peak in the uranium price, and then you'll drift off. So people will lose interest, and then it will just become, okay, well, what's the cost of production? You'll see the price start drifting down towards the price of production, because what happened literally before Fukushima, the price had drifted down to about $70, $75 a pound. And it was kind of staying. That was a good price where producers could make money, and that would produce sufficient price to draw capital in and meet the needs. And then you had Fukushima, where it basically just shut down, 20% of the world's nuclear capacity in Japan. And then the Chinese suspended their build out, and then the Germans. So you had all this, and people kept producing, because they had these contracts. There were long-term contracts. These reactors weren't consuming, and so this stuff was just piling up. So, you've burnt through all that. But I would say to anyone that wants to be in these type of markets, please go back and understand the cyclical nature of them. You can look at the long-term charts of uranium. There was a bull market from 2003 to 2007, whatever it was, 2004 to 2007. But there was one prior to that in the 70s where it peaked out, inflation adjusted, at about $170 a pound. And it's the same thing. It's a moonshot up, then it comes back down. So no one can, the future's not knowable, but I kind of base these things. These are cyclical markets. I've got my investors in a long time ago, or not my investors, my subscribers in a long time. But I've got gains of over 700 or 800% on some of these companies. So we were buying Paladin at 4 cents a share. We were, some Global Atomic at really low prices. Would I buy them now? There's probably still juice in them, but you're not where you were a couple years ago. But you still have, I still think they'll go higher in a speculative blow off, but it's not the same if you would have bought them before the narrative became mainstream.
What you described, kind of like this big run up and then the equalizing and a slow drift off, that does sound very familiar to the last bull market. If you look at the chart, you have the retail frenzy followed by the correction, and psychologically it makes sense, right? Because everyone's going to pile into it, including, the small time investors, and they're probably going to get squeezed at the very top. and get killed at the very top, and then it's going to come down. So just psychologically, I think it does make sense to have this huge run up like you're describing, followed by a correction, right?
Oh yeah, yeah.
So, but then, kind of my last question here is, I don't know if you saw that chart from the Nuclear Association, where they described how even if you bring on the prospective supply into 2040, there still will be this deficit. There just isn't enough in the ground to meet that projected demand. Have you seen that, like looking 15 years out, in terms of like, even if everything came online, there wouldn't be enough supply?
Yeah, I've seen that, but what I will caution you is that I have never been shocked at the ability of the mining industry, if it's incentivized properly, to bring on more than enough supply. There's no shortage of uranium in the ground. Now, like I said, it's unknowable, but I've been around people that have worked for the big mining companies, BHP, Rio Tinto. They know what they're doing. If it's incentivized properly, they will bring on sufficient supply. It's just a matter of, you have to see the price go up and then maintain some level for some period of time to give them surety that it's worth making $1 billion investment. I mean, this is what happened to Paladin last time. So you have a guy named John Borshoff, right? So he creates Paladin. He kind of sees what's going on. He's a uranium guy. He gets it. He builds the Langer Heinrich mine in Namibia. He spends all this money, and right at the top is when they bring the unit on, and then all that work basically gets flushed as the thing goes down 99%, goes bankrupt. He's kicked out. I mean, he's at a new company now, but that's typically what happens, right? That's why these people that think that, my little crappy junior mining company is don't listen to the managements of these companies. Most of these companies probably won't ever produce a pound of uranium. It's just that simple. There's probably a couple companies that maybe will come online this cycle, but I mean, it's just the nature of the they're not capitalized properly, and it's just not going to happen. So that doesn't mean that they're not good speculative trading sardines. I mean, if this thing gets going, so much capital. I mean, you really have to talk about this. Up until like last week, for example, do the math on this deal, right? I mean, nuclear power is integral to the world's energy. It's 20% of the United States' energy. When I ask people this, they're shocked. I go, do you know the percentage of the power that's produced by nuclear power in the United States? And they're like, they have no clue. It's 20%. They're shocked. 11% of the world, and growing. Okay. So up until like this thing took off, let's say when uranium was trading at $30 a pound, and it was, 180 million pounds, that's only $6 billion a year, okay, of fuel cost for the entire industry. The market cap up until a few weeks ago of the entire, you could have bought all of the uranium mining companies theoretically for, $20 billion, $25 billion. Now it's in the 30. I mean, what's the market cap of some of these? I mean, what's Dogecoin at? I mean, the thing got up to $40 billion in market cap. I don't know what it does. I don't think it does anything. This is a real, so, this is why when capital comes in, this is why you get these quick squeezes in this thing, because Doug Casey, who's a famous speculator, suggested one time, he said a gold bull market was like the contents of Hoover Dam going through a fire hose. But he said, because it's so small, I mean, the order of magnitude smaller of the uranium market means that a bull market is the contents of Hoover Dam trying to go through a drinking straw. It's just going to be a tremendous amount of pressure pushing this thing, but it's going to be very quick. When I say quick, relative, a year to 18 months. And then I think probably be moving on to other things. Now, that doesn't mean there won't be investable companies, to your point. I mean, we don't know what's going to happen longer term and stuff like that. But I think, the big money will be made over the next year or 18 months.
Yeah, I really appreciate that. So you're kind of like, you're not like just saying, yeah, I'm going to go all in. This is a forever trade. You're really being disciplined about when you get in and exit, and you're being very realistic about the future. So I thought this was very, very helpful. So where can people go to learn even more from you on this?
I mean, I'm on, I have a website, actionableintelligencealert.com. I'm on Twitter at John Polomny. I make YouTube videos, do a weekly market report. Just go on to YouTube and type my name in, John Polomny. It'll come up. So that's kind of what it is. I have a newsletter. I don't really like pumping it too much. If you, start following me on Twitter and watch my YouTube videos and you think that my investing style, we're looking for all kinds of undervalued situations, not just uranium. But then if somebody thinks that that's something they want to take a look at, that's available also. So yeah, that's my presence on the internet.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.